I'm gonna show you how we throw an event, and we do that here beside me. This is my 6th event I do, and that is for the asset management side. If you have been into trading, a logical step is of course to manage more capital. That's one of the companies I run. And yeah, we throw an event on a special place like this because our target audience is of course very wealthy individuals. What we try to do, and that's a strategy you might be able to copy wherever you live, is try to know where your target audience is, you know. For me, it was finding like artists, creative people that I can relate with. What I mean with target audience, like if your target group, the people you want as clients, are people that are wealthy people buy art. You know, so working together with artists might have like a nice cross-reference where you can help them throwing an event of your clients at their places so they can sell their art or promote their art, build their name. But at the same time, they can also invite people that buy art that are wealthy, and then we combine them all at one place. And I'm gonna give a presentation, short presentation, like 10-15 minutes. That's always what we do. And then after that, it's just very good food, just networking, really like a business event. I really love it, and I just want to show you around a little bit. I'll do a recap at home. I'm not like the person that just starts filming everything. A lot of people have their privacy. I never promote like anything on an event. This is my 6th event already, and I've never filmed anything. So I just want to do it like this, that I can bring you along, but in a discreet manner. We are expecting around 40-50 people, so a lot of things here still needs to be cleaned up. But what we love and what is so important is these people are invited to so many places, so many events, and being in a raw place like this where really art is being created is for everyone new, which makes it super cool for people to attend our events. This is more or less how it looks before we start. All right, I'm back home. The event was a great success, and I think it's very interesting to talk about reverse engineering, fund management, how to raise capital, but also what makes someone trust someone else with millions of their hard-earned money. That will be the topic of today. Let's break it down, and we're gonna do it step by step because I don't know where you are in your journey, but I think these steps need to be taken if you want to raise capital one day for your trading. And the sooner you know this, the more things you can put in place right now. Even though tomorrow or next month or next year you don't want to raise capital yet, you need to do certain things in advance if you one day ever want to raise capital. So let's talk about that. Capital raising. The first thing I learned with cap raising was that it is all about who you know and not who you are. A lot of people are focused on their ego. And ego, there's a book called Ego is the Enemy. This is so true. And the problem with capital raising is a lot of people ask money to the same individuals. So whenever someone becomes rich, then they attract a lot of people that want something from them. You need to position yourself different than the rest and approach people with true diversification, something that they don't have yet. Everyone that is a client of mine is already invested in stocks. They have a little bit of crypto, gold, private equity. They are doing a lot of things. It's proven they are looking for diversification. So create a product or a service that is really independent on everything else they get offered. But also one big misconception is there's not a lot of money. That is not true. There is unlimited amount of money to be raised. So don't fall into the trap that you think, we are fighting for the same 100K, 200K, or a couple million. There is so much money on earth, and you see this also in practice. When someone starts a fund and they really get traction, raising like 100 million, some funds I know raise like 80 to 100 million in a very, very short period of time. And those people just leveraged everything we're gonna talk about today. So that's point one. There's so much money and capital in the markets. All you have to do is to know how to position yourself and to what type of people. When you realize, okay, I want to position myself like this, in this market to those people, that's your first step. So after you found the people, let's talk about the second thing, and that's super important, of course, and that is how to tell them and show them that you are skillful to manage their capital and that you're unique. All you can do for this is just build a track record. So there are a lot of trading courses, trading gurus in this industry, and a logical step for them is to build a track record, because with that track record, they can show their students that they're actually make a lot of money in the markets, but they can also use and leverage that track record to get more investing capital because people can invest then in them. So a track record, how to build a track record, there are multiple ways. There are multiple companies that can verify your track record. If you just start out, I would just keep it very simple. Just find like an FX Blue or a MyFX book. Those are like third parties, FX book, that where you can online just link your broker account and then you can build that track record. Then a deeper step would be to take like DarwinX. That is a more professional track record in my opinion, and also you can attract capital there already. But eventually, if you take it even further, then you need to hire, like if you go for fund management and professional asset management and regulation, then building a track record is more or less done by not just this. I still use these, all three of these, but also you have like a fund administrator, and they calculate every month your NAV. So what's like your net asset value of the fund you run, like of the all accounts combined. And then from here, they communicate that to the investors. So building a track record is done in multiple ways. If you're new, I would just focus on building like FX Blue, MyFX book, DarwinX track records. And you don't really have to go for the full fund way, but that is the journey. I don't want to go in a lot of details. Maybe later, if you guys demand that, I will do that. But that's track record. This is the only way to really prove to people that you're consistent, you're making money, and the easiest way to attract capital. No one will invest in someone without a track record, okay? All right, so first step was finding the people. Then you prove to the people your skill level. So that was step 2. Now step 3, they are interested. They like what you're doing. They want to learn more. And now you have to really explain the details. So the details are explained to them about your strategy. So strategy is important. Like, do you trade one strategy? Do you trade multiple strategies? What keeps me going in this industry is that we don't rely on one strategy, not 2, not 3. We, of course, automate any trading plan, build a lot of algorithms, and based on that, we can build hundreds or even thousands of algorithms and really are never dependent on one strategy. So that's how I position myself in the market, that I'm not like any other hedge fund that only relies on 1 or 2 or 3 strategies or relies on like one fund manager doing everything. I take more like the overall approach with a lot of algorithms, a lot of strategies, because markets change and therefore you sometimes have a strategy that stops working and then we have a new one because we keep developing, right? Every strategy you build works for a few years and then you have a new one because we built so many. So that's the first thing that I always explain them, like how I approach the markets, that I'm not stuck with just one trading plan that now works for a little bit. Because I researched like what makes a successful fund, and what I realized is a strategy is super important, and being innovative and having access to endless strategies will keep you in the game long enough to raise a lot of capital. Second thing that's really important is risk management. There are tons of ways to lower your risk, and investors just care about, okay, I invest now 1 million in you. What happens with the money? They want to understand that structure. For us, like with multiple strategies, we have one, of course, broker account, and that separates in multiple accounts. Every strategy has one piece of the capital, and one algorithm is then trading like one piece of that capital on one separate account. With that, we have like account diversification. That's the same like we learned from traders back in the days. A lot of hedge funds blew up because they had like a whole team of traders. Like, let's say you have 50 people working for you. They're all trading on one account. If one does something crazy, the whole fund is affected. One strategy, one account, sometimes multiple strategies, but just to explain your risk. Also, what else is important? Like taking risk per trade. Do you trade 1% per position, 0.5% per position, maybe 0.1% per trade? What is your risk per position? What's your exposure and all of that? So now the key part, step 4, structure and regulation. This is quite important because you build a track record, and we shortly talked about DarwinX. DarwinX is one of the examples where you don't really have to build the whole fund structure. You can just rely on their overall infrastructure, build your track record and attract funding, and you can promote that outside of DarwinX as well for yourself. That is a proper way of doing it if you don't really have the capital to start a fund, because it is quite expensive to get a regulation, and also depends on like what country you live in. That structure is what they really look for, because now you found them, they want to invest, but Where do they put the money, right? Easy example for you would be like a Darwinex structure or a PAM or MOM account. So you have like Darwinex, and Darwinex is of course a broker. Then you have like a PAM or MOM account also at brokers. And what these structures do is, instead of really building the whole structure yourself, you can just ask your broker, like this one or whatever other broker, for an account, and they link in the back end the investor with you, the trader. So it's sort of copy trading, but then outsourced fully to your broker. So you have a trading account, then you ask your investor to make an account there, and they link it together. That is like the easy way now, the easy fix in asset management to connect the bridge between talent and capital. The more professional way of doing it, like the other structure we built. So in the Netherlands we have the FGR structure that separates like the company, so the BV, with the investors. And how this works in a nutshell, I'm not going into the details, is like an investor invests, let's say 100k, so 100k goes in, that will be deposited at a Dutch bank account for us, and then it goes to a broker account. And then every month the investor gets like a statement, the NAV, about what is the value of his investment. So we cannot access the money directly, we can just trade it. And that's like, in a nutshell, the structure. But for you guys, probably the easiest thing to do is to just focus on like outsourcing that. So an investor creates an account at a broker, and then you let the broker link that. That's like the easiest way. For us, we have, of course, the bigger structure ourselves. So a little bit more about how I got this structure is you have in every country, you have companies that build these fund structures for you. You pay them like 50, 100, 150k, and they will build everything for you. And then also normally you have like a subscription of like 10, 20, 30k a year where they do all your fund admin work. So that goes from KYC to the net asset value calculation and talking to your participants and your investors, updating them about the developments in your fund. So that is of course the professional way of doing it. It is quite expensive to set up, but I just want to give you the whole picture, right? Just full transparency. You can now attract capital. If you have all of this, then you can attract capital because you already did it with one person, right? You told it to someone, they invested through the structure, you linked their accounts, you're building the track records. And now it's all about scaling. So of course this video I started with an event, and what we do is, instead of just approaching one person, now of course it's like a flywheel. So you find the person, then you invite them to your event, and on your event you ask them to invite more people. So you have more people, and then all you do is of course build your fund. And then if your performance is good, then of course you attract more and more clients. And sometimes you think like the best funds on earth, you would assume that they also have the biggest capital, but sometimes that's not the case. Like if you're not good in this, like this leveraging this flywheel, if you do zero marketing, money will find you. But there are also a lot of talented people on earth with a very low amount of money to manage, because you need to understand that you need to throw these events, or at least you need to find the people. Like how I talked to you at the start of this video, you need to know how to position yourself and then just perform, and perform for the long term. Yeah, have a good vision. And if you do this, then you will make it in the industry, and you can also raise millions yourself. What I would do if I was starting over, the first thing I would do is of course focus on just track record building. Focus on building that track record, and then everything else comes later. Okay, so build that track record, manage that track record, really put in your effort to build a track record, and let people look at it. And don't open the gates for investments yet, just let them look, build that trust. And then the second step would look at the structure. How can I structure this? Do I do whatever method I told you today? What will it cost? What will it be worth? How much money do I make? Because you just you only charge like performance fee and management fee. Is that enough? Are these two enough for you with your returns to actually make a lot of money? You know, because you need quite some money to be at break even. with a fund structure, especially the more complex structures. So you really need to think about, okay, do I want this, or can I easily just use like a DarwinX or something like that to not have that expensive structure and then just do it that way. So yeah guys, thank you for watching. This is how I did it. This is what I've been doing for the past 10 years. I started with learning to trade, then I learned to automate. Then I built a platform to make my automation easier, and now also your automation easier, because I was not a developer, or still I don't see myself as a developer. I use Perfectus AI for it. And after building those strategies, then you get results, then you build a track record, people get interested, and then you build a structure, and then you raise capital. That's like how I do it, and that is what I've been doing for a while, and I want to do this for a long time. So I'm very passionate about it. If you have any questions, feel free to drop them in the comments, or go to my IG and just DM me, and it will be in the description below. All right, see you in the next one.